All right, guys. Greetings, traders. Welcome to Forex Fridays with Deontay. I hope everyone had a productive trading week. Whether you gained profits this week, you faced losses, or you gained any insights in the market, I hope all is well. I hope all is well with you and your loved ones as well. Tonight, we're going to delve into our weekly range review. As always, we're going to start off with our iconic weekly range review, starting with the DXY. Next topic will be exploring the Asian session and utilization. We're going to be talking about high probability scalping via daily chart. And then we're going to address some of the pitfalls of favoring specific currency pairs for the entire month or for several months. So let's kick it off with the DXY for our weekly range review. And then we're going to shift our focus to like U-Swissy and like Aussie versus the Canadian dollar. So we're going to change the pairs up every week so that people can't say that I'm biased and I'm like, oh, it only works on these pairs. So before we get into our topic, I want to emphasize on a methodology and an ideology that I believe all traders should be integrating into their toolkit. And that's going to be the weekly opening price, also known as Sunday's opening price or SOP, the acronym SOP. This price point is very crucial in understanding price action and the dynamics that it serves to us as traders. Now, it serves as a natural indication for overbought and oversold conditions. Now, Sunday's opening price itself represents fair value or marking off the starting point to the week or the opening bid. So traders are not paying a premium or traders are not selling at a discount. It's fair value. It's the starting price point. Now, once price moves above Sunday's opening price, as you can see here, I gotta readjust it because it's not correct. Once price moves above that, it's in a premium, right? That's ideal sell conditions. And once price drops below it, it's in a discount, ideal buy conditions. Now, not every single week will you find a great buy. Every single time price drops below Sunday's opening price doesn't mean you have to buy outright. Same thing vice versa. Every time price moves above Sunday's opening price doesn't mean you have to sell outright, because there are moments and times where price is above Sunday's opening price and continues to trend higher, or there are moments when price is below Sunday's opening price and continues to trend lower. So it doesn't mean jump in here and just sell below. Sell above or buy below immediately. There needs to be some type of structure and framework before you start buying and selling. However, it does take a lot of stress over the trader's shoulders. Many retail traders will have a better understanding. Okay, I should be a buyer more likely when price drops below Sunday's opening price. A lot more retail traders will understand when price moves above this price point, I should more likely be looking for sells. I shouldn't be looking to be a buyer. That takes a lot of stress off of everybody's shoulders, and it brings us to a very simple idea, right? We all arrive to the same table. Now we're going to jump into the DXY this week. Now, when we see the DXY, we can see clearly, right? I know it's hindsight, but hindsight is the only way we as traders are going to get experience in the market. I don't care what anybody else tells you. Even if they're a professional trader, I don't care if they're just starting off or they got some experience in the game. Hindsight is the best teacher, one of the best teachers. And then the second best teacher would be forward testing or testing a trading model in present day. So when we look back for the week, we could clearly see on certain days the low of the week formed and the high of the week formed. So here Tuesday formed the low of the week and Friday formed the high of the week. So very opposite ends here. We can see at one point in time, price during the New York session, right at the end of New York's 10 a.m. here, price turned around and pushed all the way up to Friday's high here, closing the week off up here. So it's very crucial to understand where to buy and where to sell. Now, as we go into these other examples intraday, I want you to keep in mind that this is a fractal idea. This ideology or methodology or this belief system of buying or selling above or below this price point, it applies to other things as well, such as the kill zone's opening price or the session's opening price, right? New York session opening price, London opening price, Asian opening price, London close opening price. Those kill zones have an opening price, and that same thing occurs with that as well. You also have true day open at midnight opening price, MOP, right? The acronym MOP that we use often with 12 a.m. It's the same idea. The same idea can be seen on the monthly chart, right? The monthly opening price has the same idea. So let's go on to U-Swissy and take a look at some ideas. So you can see on the chart, we got Sunday to Friday. We have the New York model here. We have another New York model here. Have the asterisk here. Really important. We'll talk about why I have that labeled like that. And then got a London model on Friday, right? Thank God it's Friday. Let's go into Monday. Now, before we get into Monday, just take a look at where the low is forming for the week and where the high is forming for the week. I'm going to make sure everybody can still hear me. All right, cool. We're good. If we do disconnect at any point, don't leave. It will reconnect us. Sometimes the Wi-Fi does act a little finicky, so bear with us. Technical difficulties do happen, but it's all being recorded. We can see that Tuesday makes the low of the week and Friday makes the high of the week, just like the DXY. So there's some correlation there, of course, right? They're positively correlated because it's dollar versus Swiss franc. So price is going to continue to trend higher since the dollar is gaining value and the Swissy is declining. Let's take a look at Monday's New York model. So let's bring it back here. And I will answer questions towards the end of the topic when we move on to the next topic in transition. So this is Monday. So just before 7, I'm going to label a time period that is a window that I like to utilize and frame liquidity pools. Now, as traders, we all know price, or if you don't know, now you know, price is chasing liquidity. It's chasing orders, buy stop orders and sell stop orders, above highs and below lows. We're going to frame those buy stop orders and sell stop orders via 15-minute time frame inside this time period here. It's going to be our London dead zone, right? We don't want to trade here. No traders should be looking to trade here unless they've already got a trade via last session, London. No intraday trading should occur here. You could argue and debate, say that there could be setups there, but we don't want to do that because it's more wise to wait for a live session. And what do I mean by live session? A kill zone where institutions are really going to be putting in orders, or the algorithm is really going to gauge price and orders that have been placed in. So the New York session would be a live session, and this would be a dead zone. And this is 5 a.m. to 7 a.m. New York Eastern Standard Time. I'm going to play it forward. 1. This is 7 a.m. So this is still included in part of this dead zone here, the London here. We're just going to use this, NYO, New York Open. So right now where we stand, we can all agree that we're above Sunday's opening price. Absolutely. SOP down here. Now the other one that we can agree that we're above is midnight opening price as well. So far, you can see how we're adding these confluences to this methodology. We have the Sunday's opening price, we have the midnight opening price, and we have the New York Kill Zone's opening price. This is where traders are going to most likely find very dynamic trading setups. Sometimes it happens very early in the week. Sometimes it happens midweek. Sometimes it happens at the end of the week. And you'll see it happens in different parts of the week. But if you are vigilant, you come to the market every day with this idea in mind. Anything above these swing highs is buy side liquidity pool. Anything below these swing lows is sell side liquidity pools. That's what the market's going to be targeting. Now, there are sell side and buy side liquidity pools outside of this time period. These couple of hours here, yes, we know there's liquidity pools outside of that. But we're just gauging it off of this here, the small window in time for us to frame what we can find here. Let's play it forward. Nothing breaks. So here, buy side is broken. You can see it runs both levels. We either nonetheless, it breaks one level or it breaks two levels. Once it breaks one level, that's fine enough. We have a purge. There was a question a young trader had asked me. They said, "Hey, Deontay, would you consider this a break, even though this candle pulled back and closed below it?" Absolutely. And my analogy to that is think about professional players or professional sports in general, not even professional sports, just sports in general. Just say you play football, right? American football or soccer, whatever you want to call it. Everybody calls it differently in other places. But in those sports, in football and American football, once that ball or the player crosses the plane of goal, it's a score. It counts. So this counts as a raid, regardless of not if the candle closes above it or below it. It still ran that price point. So once it's broken, it's broken. You can't take that back. The orders that were above these highs have been mitigated or triggered. That's how I like to view it. At this point, after rating this, what do we have left and available to us down below? Now I'm asking the chat. Anybody in chat can answer this. After taking out buy side, what do we have left now? I know it's a rinse and repeat. We gotta stay consistent because it's the only way we as traders. Thank you, Emmanuel. We have side left. Thank you, chat. We have sell side available to us, right? We talk about this every week and it doesn't change, but we got to keep pushing it forward and telling people the same thing over and over because that's the only way the community is going to get better. Sell side is available. So we could take the educated guess or the assumption or the speculation that the market may want to draw here during the New York session after rating one side already. Now this is where we're going to stalk our setup because now we're in a triple confluence idea. We're going to go from the 15-minute time frame and we're going to go down to the 1 minute time frame. I like to use the 1 minute as my entry. You may want to experiment and use the 2 minute, the 3 minute, the 5 minute. Now my entry is very particular. It's going to be a fair value gap for this one, at least, because it's a sell setup because we're in a premium. We're overbought. So we're looking for sells. We're not looking for buys. The buying thinking is out the window. We're just thinking sells right now at this point. I need to see a swing low rated with speed or a fair value gap. And we'll play that forward until we get that. So keep blowing. We'll keep going. Price pulls all the way back up. Notice how price hits the opening price as well. I don't know if it's lagging, but price hit the opening price as well and then ran up. It's a very sensitive price point. It's influential to what the price action is going to do. There's other factors as well. But when we look at something like this, that's too clean. Look at how it hits that line and literally turns around on a dime like that. Are we going to chase this price action? No, because our entry hasn't been shown yet. My entry, at least. So let's keep playing it forward. I can see it's kind of lagging every time I click the button. It's still going up. See, this is why we don't chase price. Many people will say, oh, the entry's there. The entry's there. Wait. You gotta wait. Because you might get pulled into some drawdown. Play it forward. And let's stop it right here. It's a little further, actually. Still hasn't shown itself, unless I'm blind to it. I don't think it's shown itself yet. Double check. Nope. And we'll keep going. Notice it's still going higher, too. Look how high it's going. So high up there. That's not it either. And we'll stop right here. You see how this swing low here? 1, 2, 3 is ran with speed right there. That's where we would look to go short. Where's the speed? Here. It looks completely different from a lot of other entry ideas. It's the speed through the swing low. It's not walking through it. It's running down with a full candle, opening again with another candle, and running away, leaving that inefficiency in price. So that's where we would look to go short. Now, if I'm correct on where I'm labeling this, because like I said, I go back and I study this stuff so it could reinforce the ideas and habits. 2% if you got a little more experience, 2%. 3% if you're really experienced, but you shouldn't really be dabbling with 2 to 3% if you haven't been profitable for the last 6 months, last year. And we'll wait to see if price returns back into that. Price tags it here. That's where we be in short, right at that price point. We're in short. Let's say you got a 10K account. You're risking 1%. That's $100 on this trade here that you're looking for. The entry idea is also forming above all three levels. We can all agree that this is very objective in nature. It is not subjective in the way we're framing it. The swing points that we're labeling, the opening price that we're labeling, and the entry idea, very objective. Now, I know there might be some discrepancies amongst brokers. I am using Oanda. I should be using Oanda, correct? USD Swissy. Yes, I'm using Oanda as our liquidity provider that we see here. And we'll play this trade all the way through and see what happens. Now, even though it's outside of New York session, we took the entry inside the session. Notice as well, the entry happened very late in the session. This is another question because I get these questions a lot. People ask me, well, when does the entry form? Sometimes it's early, sometimes it's mid-session, and sometimes it's right at the end of the session. This entry formed at 9:01. So just after 8:30 or the heart of New York session. But the actual time we actually get our order filled was later, though. You see how it runs away? Now, those that are in the paid chat, we saw that last night in the Asian session. We had the entry, and it ran away. And we had to just let that go. But this one came back and gave us the entry without running sell side. So another question, because I know people may have these questions as well. Hopefully, I'm answering some of them that are coming to mind. Some people may say, but what if it runs down here first without giving the entry, and it leaves New York session and it comes back into it outside of New York session? Would you still take that entry, Deontay? No, I am not taking that entry. It's done. If I don't get the entry inside this time window 7 to 10 a.m., I am not looking for the entry anymore. It's not that kill zone entry anymore. We're not trading inside New York session anymore. So it's not viable. It could be, but I personally would opt out of that. Another version, if it comes down here, and let's say it's still inside New York session, it takes out the sell side that we were targeting because we were targeting sell side liquidity below those 15-minute swing lows in this dead zone. Let's say it takes it out without giving us our entry or filling our order, and price then returns back up here. Do we take that entry again short? I would say no. I'm not taking that entry again because both sides have been liquidated, buy side and sell side. This market can now continue to keep going up now at this point, for all that I know. So just to be safe, I would leave it alone. I want to see one side taken, the entry and ordered filled, then the second side taken. I don't want to see both sides taken, then my entry is filled. Hopefully that makes sense. Let's continue playing it through. Sheesh, it's lagging a lot. I can see it's like skipping. There you go. 15 pips. So on that trade idea, you want 100 cash, right? If you risk 1% on 10K, $10,000, you just made $100. You didn't have to do too much. It was pretty simple. Now, I know many people say, oh, that's hindsight. We could never catch that live. Well, we've shown it many times that we can catch it live. If you follow the steps and what I'm showing you and you wait for the environment where the things align, you can catch this. It's not going to be perfect every single day, but you can potentially catch the same idea that I went back to find in hindsight, in theory. Objective measures. Let's move on. And I will check the chat in a second if anybody does have questions I didn't answer. Save it for the end of the topic. And we'll play it all the way through. We'll watch it as it goes through Tuesday. Play it all the way through. And that one setup, look at that one setup. It crosses back below Sunday's opening price. But look at how they're selling right up here. That one setup tends to trend on. And it sells even more too, right? Keeps selling. Now let's look at the New York model here for Wednesday. So all it takes is one trade, right? Like one shot, one kill. That's exactly why I have it marked off here, because this is going to be a one shot, one kill. This could technically be a one shot, one kill too. Could have made 50 pips off of this move already, and you're done for the week. 60 pips, 70 pips, you're done for the week. Just that one trade I did. If you're able to have a trailing stop and not get stopped out, it's pretty hard to have a trailing stop. We discussed this many times. The market does gyrate. Sometimes you're not lucky enough to have the market run down this clean without running back up and stopping you out and then going short. So it's a very difficult thing for traders to maximize unrealized gains. So always pay the trader as much as you can. Pay the trader. Nothing changes. Same thing. Now the conditions are different though. I just showed you a sell setup for the New York model. Now let's look at, now we're clearly in a discount. What should we be thinking? Should we be thinking sell? I'm asking the chat. Should we be thinking sell while we're below Sunday's opening price? Longs. Thank you. Exactly. Thank you, chat. Shout out to the chat. Thank you for those engaging. We're looking for longs here. We're not looking for shorts. When it comes to buy setups, it happens below this price point. It happens below the weekly opening price, Sunday's opening price, SOP. Let's continue. Let's mark off a few other things as well. Let's mark off midnight opening price, MOP, midnight opening price, or true day open. I know there's a lot of terminologies in this trading community. Everything is tomato. So don't get confused with the vocabulary. A lot of people like to trick a lot of people with the vocabulary. Oh, I'm using higher echelon vocabulary than you are. It's all the same thing. We're looking for a swing low or a swing high. And we'll bring it back to 7 a.m. so we can clearly understand like the sequence and how we would frame this. So we're below Sunday's opening price. We know that. We don't have to show it. We're well below it. You guys watched it drop from Monday going into Wednesday, going to Tuesday, Wednesday. We got the opening price here for the kill zone, New York Open, NYO. Oh, give me. There we go. NYO. And now we're going to frame our liquidity pools via 15-minute time frame. I am not trying to confuse anybody here. I'm not trying to trick anybody. I'm trying to be as clear and concise as possible because as a new trader, it could be very overwhelming to not understand steps or structures. Or some people just don't frame it in a way that you can just take it ABC, 1, 2, 3. I want it to be easy so that kids can understand this stuff. This is Southside. This is also Southside. You can see it runs it out at 7 a.m. At 7 a.m., it runs out this swing low. 1, 2, 3. That's a swing low formation. There's a higher low on the left and a higher low on the right. That's a swing high formation. We won't take this swing high. Why? Because it's already broken. This swing high is already broken before 7 a.m. So we're not even looking at that. We're not even paying attention to it. Yes, it's an old high, but we're not looking at it. We're looking for the unbroken highs and unbroken lows. At 7 a.m., it runs down. So it sweeps sell side. And even there's another sell side liquidity pool. It's not a swing low per se, but it's the lowest low for the London lunch. So we're going to mark that off. This swing high happened to be the highest high of the London lunch. But even if it wasn't a swing high and it was just a high, we would still label it. Let's play it forward now. We can see currently price at 7 a.m. is below 7, below New York Open, and below midnight. It's just getting below midnight, right? So let's keep playing it forward. Go on the 1 minute though, because that's where we're looking to take our entry. Now, while prices, they either don't have a structured entry idea, they don't know how to get into the market at all. They just buy and sell. They're gonna chase this because it feels like the market's leaving me. Oh, Deontay's leaving me. Right? It's FOMO. The market's leaving me. So what? Let it run. No trade is no risk to your equity. I'd rather you take no trade than for you to take a trade and burn 1% just because you're just chasing price, or burn 2% or whatever the amount that you risk. Leave it alone. Wait till it makes sense. Wait till everything starts aligning. Play it forward. No, let me stop it right here. So there goes our entry. Now, this entry idea is not perfect. It's not the one that has all three aligned. The entry is forming above midnight opening price. It's close though to it, right? This is something I've learned through ICT. You'd always say either buy or sell near the opening prices. Buy or sell near it. This is in proximity. It's not exactly where we would want it to be. This is the fair value gap here and here. That's the idea. And there goes the swing point right through it. There we go. I'm going to double check I marked off midnight properly too, because I tend to do that wrong. Yes, that's correct. And there goes our entry idea. So here it's more of a double confluence than a triple confluence idea. So it's more than just one, it's two. It's below SOP and it's below 7 a.m. Take a 1-to-1 scenario. I like 15 pips for 15 pips. Some people might do 10 for 10. Some people might go 20 for 20. I would not recommend you doing 5 for 5. Too small. You're going to get smoked. Market's going to run you out, especially if it pulls back a little bit. We'll play it forward. Hey, we actually have a better entry. See, look at me, not being patient, right? Even me, myself, if I was patient enough, and I misspoke, I guess, if I was patient enough, this is the entry. There goes the triple confluence entry. See how chasing price or just assuming sometimes that you got it down packed, you're going to get it right. But we'll leave that on there, though, just to see how that would play out. But this is a better entry because it checks off all qualifications below midnight, below New York, and below Sunday's opening price. And I'm not sitting here saying that I caught these trades and I was looking at this pair at all. I just went back earlier today and was just studying price. And there it is. That's our triple confluence idea here. Zoom in on that entry so we all can see. It's always the same sequence. Always. Always. It's always the same sequence. Right when the market is about to make that turning point, almost 80% of the time, this entry idea or this coded pattern that the algorithm is doing is in the area. This one in particular. Press play. And watch it. We'll speed this up for the video's sake. I'm going to 5-minute. This drawdown, as you can see, but we're not worried about the drawdown because we know we risk properly. That's the whole point. We can adhere the drawdown. And a lot of people be unhopeful. Probably got out the trade already, right? But if you believe in your idea, wow, that thing was lagging. And it shoots fast, shoots very fast. And TP would be hit. And then some. And it runs into Thursday. And it runs right back up into what? Sunday's opening price again. That one idea where we plugged ourselves in during the kill zone. We didn't plug ourselves in during the dead zone. You see how there's consolidation here? I put on the, see that? See that gray area? From 12 p.m. all the way to 8 p.m. Even Asian session, we'll talk about it later, even Asian session consolidates. Sometimes it's trendy. You see over here, sometimes it's trendy, but its natural characteristic is to consolidate. But look how it consolidates all the way through that. I'm not looking for trades here. I'm plugging myself in during a live session. These gray zones are dead zones. Like, leave that for the traders that don't know what they're talking about. Leave that for the traders that are more risk taking, right? And they supposedly are scalpers and they can scalp something off in that. Let them do that. What is he texting me for? 1 second, folks. My little bro. Family first, you know? All right, he's good. All right, cool. Leave that for the scalpers, or leave that for the traders. Like, and that's it. That's all I can say about the dead zone. Don't trade here. Don't trade here. I would prefer you to trade during the kill zones. Trade during all the sessions that you see here that are highlighted colorful, right, with bright colors. That's where you want to trade. There's another session that I don't have highlighted here. You can see it's in between the New York session and this dead zone here. That's London close. That's a kill zone I don't even worry about personally. I just don't even consider it a kill zone. I know that there's a characteristic to it. There's a reversal phase that could happen during that moment in time, but that's something I don't like to trade. I don't like to trade London close. I just leave it alone. But do not trade in any of these gray zones here. None of those. It's just not worth your time. And if you play it all the way through to the end of the week, you can see how that one set up again in New York. Yes, we adhere some drawdown. I don't think a lot of people understand that when you trade, you're going to be in drawdown. As soon as you press buy or sell, you're going to be in drawdown. And you can't do much about it but frame your risk. And that's it. And this is why I had the asterisk there, because it was a one-shot, one-kill type of idea. It happened in New York. And we were able to hold that without 15 pip SL, only risking $100. And now gaining $100 and then some going into Friday. Very interesting week, though. Back and forth. Right? It's not our classic, okay, Monday, and then Tuesday drop down, and then Thursday, then come down, close Friday. That's what I like to see. But it's not always picture perfect like this. It's not. Or vice versa when it's a bear setup or a bearish weekly drawdown. But that's you, Swissy. Let's move on to the next pair, and then we'll jump into some questions that people may have. Not GU. That's not what we want. ACAD, right? Different. This is a pair I don't trade, but I know some people do trade it, and I just want to be more flexible with everybody else because they may trade this and they may not really have that confidence because they see, oh, Deontay's not looking at it, so I shouldn't trade it. That's not something you should do, right? If I'm not doing it, doesn't mean you don't have to do it either. You can do it as well. Just find what works for you. Once again, look at how this is forming on the hourly. So this is a nice week to trade, honestly. It's still a nice week, at least for ACAD. It's a really nice week. Instead, Monday makes the low of the week, not Tuesday or Wednesday. So generally, we like to see Tuesday, Wednesday make the low of the week. But you can see it was Monday. I try to tell people all the time. Sometimes it's Monday too. Sometimes it's even Sunday. It's not really considered a day, but sometimes even Sunday is lower for is the lowest low of the week, and it runs up all the way to Thursday or Friday. So keep that in mind. Everything is not going to be constrained the way you may visualize it. It might look a little different. You got to be a little flexible with that. You can't control this market. Everybody wish they could. We got a London model. So let's take a look. So it's different. The only thing that's different is we're changing the time period of what the dead zone is. And the dead zone before London is Asian lunch. I'm calling it Asian lunch because it comes after the Asian session. So that's what we're framing it off of. This is ACAD, right? I never look at ACAD, honestly. This is probably like my first time looking at this pair ever in the last 6 years or my entire trading career. I don't look at ACAD ever. I'm not saying you don't have to trade it. You can. See how there's no swing low rated or any swing low available? So we got to take the lowest low that forms here on this candle. And that's what we're going to use. That's how I like to do it. I'm going to take the highest high. That's buy side. And there's another one. Let me double check. No, these are equal highs. So we'll leave that as that. So we got our buy side and we got our sell side. Now we got our opening price. We'll just say 2 a.m. open. And then we'll look for midnight opening price, which is here, which is the start of the Asian dead zone. MOP. And we can clearly see we're below SOP as well. So we got that triple confluence. We're in a oversold condition. We're below. So let's see what happens. Let's play it forward because we're not trying to just jump in and react. We're trying to wait for something to happen, then react. We need something to happen. There needs to be some type of casualty. I know the way I'm phrasing it sounds funny. There needs to be some type of casualty. That's when the best trade setups occur. When there's some type of liquidation on orders, there needs to be an accident. And what happens? Let's play it forward. A casualty happens. Sell side is rated. Here. Now that's when we start looking for setups. The best buys happen when the market goes down because everybody's chasing it down when the market makers are probably just waiting to position themselves long. Same thing vice versa when you're selling. When the market's going up, that's generally and ideally the best time you want to sell. And we're going to keep playing it. So that's that sell side that was ran. And we're going to wait for our entry idea. And we're going to wait. Even if it goes lower, so what? Right? So what? And there goes the entry. Swing high, speed through the swing high. It's not walking through the swing high. It's running through the swing high. Again, this is ACAD. Can this be seen on other pairs? Absolutely. Can this be seen on the majors, exotics? Can this be seen on gold? Yes. Can this be seen in commodities? Yes. You just got to figure out the time zones and the windows where it's dead and when it's live. All the markets are coded very similarly. Play it forward. Our entry is occurring. Oh, did we get the entry? Ooh, looks like we don't get the entry. Looks like we don't get the entry. So you can see we missed one. Like I said, I'm only human. I only went back to like observe and study what happened in the market, and I thought this was an entry. Just quickly scanning it over. But you can see again, we missed that entry. Many folks may say, last night I had a trader in the paid community saying, because we missed the Asian session sell setup. It was perfect. Everything worked out. It ran buy side. It gave the entry, but it never triggered our order. It just kept selling off. Someone said, well, can't we just get in short when we see the entry? Possibly you could, but I think that's a lot riskier than just waiting for the setup. Because let's say we do go in long and then instead it pulls back hard. It pulls back really hard. And we adhere more drawdown than we really want. So I prefer to be a consistent trader and stick to the rules. The entry, we're waiting for that entry, then we go long. But you can see the idea is there though. I want you to see not every day is perfect. You gotta live with that. Could there be a workaround and could they still get in? Yes. But if you want to be consistent, you stick to certain rules and you don't break the rules. If you have rules that tell you otherwise, then go ahead and still take the long. I'm not telling you don't have to, but I want people to have the idea that you got to stay consistent. Stay consistent and see how it takes out sell side and it runs all the way back up to that buy side liquidity pool that we framed during the dead zone. Is that random? Absolutely not, because we've been showing it for the last 2 years on this channel. Absolutely not. Absolutely not. Yep, that was the buy, but we missed it. We missed that one. You gotta, sometimes you gotta let things go. And let's see if it does come back down into it. I want to see what happens. This is my studying too, as well, right? You guys get to study, I get to study too. Hits it. Let's see. I just want to see if it does actually hold up still. Because it can. It's on a 15-minute. Let's move on to the next day. We'll see if it does. The next day is Wednesday. Ah, it actually held through. Interesting. It's pretty interesting. Stop. Let's go on the 15-minute time frame again. Oh, we are on a 15-minute. 2. Here, so this is going to be our last example for this topic, and I'll get into some questions if anybody does have any. If anything's unclear, don't be afraid to ask, and don't be afraid to message me. You guys have access to me, especially those in the paid chat. Like, utilize me. You guys put up money to be in that chat. Don't be afraid to text me and hunt me down. The same way, if you went to school, you have a professor, bro, and you're paying money to go to that institution, you better be questioning your professors, questioning your teachers, bro. Tax dollars go into that, man. Dead zone, midnight to 2, Asian dead zone. There we go. Opening price here. It's 2 a.m. Midnight, MLP, midnight, true day open. And we're above, I think we're above, yep, we're above SOP down here. SOP again. So we know that. So we have a triple confluence again, once on our hand, and it's Wednesday. It's a Wednesday, ideal trading day. Buy side was ran going into 2 a.m. That swing high here runs it. That means we go down to the 1 minute. These are the steps. Frame your liquidity pools on a 15-minute time frame and wait for the entry. See if we get a triple confluence idea. Zoom in. Nothing there, nothing there, nothing there. And it's here. There it is. It's right here. Just around 3 a.m. too. Right the heart of London. For those people that have time or are available to trade London, or those that choose to trade London, you'll notice a lot of the setups do happen around 3 a.m. or a lot of the turning or pivotal points is happening around 3 a.m. New York Eastern Standard Time. So that's our entry. Again, doesn't look any different. Just inverse to the buy idea. It's a speed or fair value gap through a swing low. We're short right here. Once price taps that, we're going short. We don't know how far into that fair value gap it's going to dig into. I have no idea. It could be it could just tap it slightly and then go short. It could hit 50% of it, right? The mean threshold of it, right? And then drop down. Or it could fill the whole thing, or then some, pull us into drawdown and then go short. That's the whole idea why we have a stop loss. I'm going to 5 minute for this. We'll zoom in. I'll play this out. And there we go. TP hit. TP hit. 15 pips. You made $100. All you got to do is hold and believe in that trade idea, right? If you believe in the idea and you got the best entry possible in the triple confluence, then you kind of take a lot of stress off your shoulders as well. So you don't have to really worry about it. But before taking the trade, the risk is what really prepares you to adhere to the drawdown. Because if you're risking 6% and it pulls up 5 pips and you're down $2,000, you're down $3,000, that might be something that's not easy to sit on the mind. So you're going to more than likely either jump out of that trade, or you're probably going to get a margin call. And you're just eating through your equity. So risk 1 to 2% until you get a lot more profitable and a lot more experience. Then you can start talking about, okay, I'm risking 3%. Start off with 1% for a couple of years, man. Slowly compound your account. And there's tips and tricks that you can do once in a while to help yourself compound your account faster, which is why I said, hey, learn how to swing trade. Learn how to swing trade. And let's play it all the way through. And you can see that one idea was a one shot, one kill. Gave you more than 40, 50 pips all the way down. If you were able to adhere the pullbacks, because look at how many times it pulls back here. It wasn't like that UCAD example that we were showing. UCAD Monday had a sell that sold off. It didn't really have many pullbacks. But here, that Wednesday setup, you can see even during the dead zone, there was many times it pulls back. So that trailing stop that you may have that's above a swing high, it might get eaten up. It's a very great chance, a high probability that your trailing stop is going to get hit. I don't think anybody in the trading community has any technique in how to trail a stop loss perfectly. You're going to get stopped, guys. I just want you to know that. It's inevitable. I don't know anybody in the last 6 years of trading that has an idea or a methodology on how to trail your stop perfectly, because the market gyrates, guys. Let's say I'm in profit here. I'm in profit. It's coming down. I scale out. Okay, it hits my final TP. I still want to hold it, right? Right. Let's say I don't have a TP in, but I know that this is the level that I should be getting out or taking off a lot of my position, and I should be holding a little bit on, like maybe 10% of the trade is still on, and I start trailing my stop loss. Let's say this is the line that's our SL, and we start trailing it below. Let's say it gets 10 pips. We scale out. So where's 10 pips actually? All right, around here. 10 pips is somewhere around here. Cool. A little lower. Okay, 10 pips is somewhere around here. Now we move our stop loss down. Look how easy price pulls back up. It just knocks you out. So pay the trader. Pay that trader, bro. You spent your time to wake up early. You spent your time to run home or, stop everything you're doing to trade. You better pay yourself. Time is money. You ain't got time to be wasting. So that is our weekly range review. As you can see, it doesn't matter the pair. We did USwissy, which is a rare one. I used to trade that. And we have ACAD. I never trade it, but I know there's some people that trade some Aussie pairs. So here you go. That was a one shot, one kill all the way down here. Even Monday, London and New York. Oh, there was a New York model. We didn't even talk about that. We could talk about it, but I'm moving on to the next topic. It's the same idea. So I guess the London model didn't play out, but the New York model did. But it also, I guess, that London model also lapped over into the New York model too. If we quickly just zoom into it, I just quickly zoom into it. Find 7 a.m. We're 7 up here, all the way up here. That's 7 a.m. here. We can see it drops way below 7 a.m. It clearly runs sell side below that dead zone from 5 to 7 a.m. It runs sell side, these clean lows here. I know we're looking at it from the 5-minute, but you guys are intelligent. I know you guys get the gist of it. Runs down. If we check out the 1-minute, see the 1-minute time frame. Sell side is ran. That's 7 a.m. up there. It runs all the way down, all the way down, all the way down, and then it gives the entry right here. It also lines up with the London one, which is pretty interesting to see. This is always a learning moment. There goes that entry in New York session, right around 8 o'clock or right around 8:30. There it is, 1-to-1. It's below Sunday's opening price. It's below midnight opening price. It's below 7 a.m.'s opening price. Triple confluence again. Go long. And you guys see that it shot up all the way up into Wednesday. Play that forward. TP smashed. There you go. So New York model and London model. London model didn't give the entry. During London session, it did not give the entry. But the New York model did come back. The whole traders down there for that opportunity potentially. So, yeah. That is our weekly range review. I'm going to check for questions. I'm going to drink a little bit of water. And we'll get right back into the next topic. Next topic is going to be very interesting as well. Check the chat at 18. Someone else caught something at 2:48 a.m. The second occurrence in the model. See, I'm blind too, so even when I don't see something, I know other people do too. Let's see what else someone said. My little brother doesn't want to trade. I actually manage his account. I manage his prop firm account. for him underneath his name. So he has a funded account. I gave him a funded account for his birthday. That was his birthday and graduation gift. So now he has his own allowance, but I manage it though. What are the factors that you can make stay on the sidelines for particular session you intend to trade? Okay, good question. Like that question, my man. Good question. So someone in the chat said, what are the factors that make you stay on the sideline for a particular session you intended to trade? So let's say you're a London trader. This one's more specific to a certain session. If you're a London trader and you have an Asian session, or even if you have a New York lunch session, both of those sessions back to back, if that session is very rangy, right, it's very extended, more times than not, that London session is going to be a funky one to trade. I'm not saying there's not going to be a trade set up there, but if that Asian session is not in a clear consolidation, or also including the New York lunch, if it's not in a clear consolidation, you're going to probably have a very funky Judas swing during the London session. That's one thing. The New York session, I don't really have any filters around that, but I could say that if there's no news present during that kill zone, that might be a sign that you may want to take it easy during that kill zone. If there's no news during that day, leave it alone. And let me see something. Settings. We had a news event here. Rate decision, but that was later in the day. So it looked like we caught the rate. So you can see they didn't change the rate. This is another topic. We'll get into that at the end. But notice, I want you guys to keep this in mind, though, what we're talking about here. The Reserve Bank of Australia, the RBA, the interest rate decision, they didn't change it. It was unchanged. And look what happened when they left it unchanged. It continued to push up against the Canadian dollar. Think about that. Keep that in mind. Damn, my voice is cracking, man. Jeez. Keep that in mind. But if there's no news event present, that is something that would make me want to sit on the sidelines pretty often, more times than not. Not saying there's not a setup, like I said. Just be cautious. Probably risk a little less than you normally would, and still take the trade setup. Anything can happen. But really, for the London session, if that Asian session is range bound, not range bound, is extended, don't look to trade. Just check out Sundays. Technically, this is an Asian session. The indicator marks off the Sunday's Asian session like this. Technically, I wouldn't consider it a true Asian session, but it is an Asian session. This had some strong consolidation at the end. So from 9 o'clock going to midnight, there was still consolidation. But when you get those Asian sessions that are like, let me see, let's go back. I know it's ACAD, so I'm not like this. See this? Look at this, all the way up and then all the way down, all the way up. Leave London alone. Leave it alone. You want to see that clear. Look at this clear consolidation. London probably gave a good Judas swing here. You can see, look, you could even see it here in this price action. Even the New York lunch session. Look at the consolidation, back-to-back consolidation. Pressure runs up, Judas swing, and runs down. Clean. But look at this Asian session. Look at how London traded. It just sold all the way down. Nothing. Gave nothing until New York session, then turned around. So that's one. Hopefully this answers your question, my man. That's a way I would filter or try to stick to the sidelines and be like, hey, you know what, today, I don't think this kill zone is the one I should be looking to trade. Let me opt out of London. Like if you're a London trader and you have more time available to yourself to trade New York, if you can make that exception in your life schedule, it may not apply to everybody, but if you can make that exception, opt out of London and come back to New York session. That's what I would do. So you can see here, this Asian session was very extended. Back, it was up and then down. It wasn't a clear consolidation. London just continues to just trend all the way down into this news. And you can see, look, news event during New York session. New York session probably gave a more dynamic move. Drops below 7 a.m., somewhere around 8:30, 8:15. The news drops and you get that sponsorship. So hopefully that answers your question. Let me check to see if anybody else has any other questions. Hey, I try to be good, man. You got to be. Family matters, bro. That's the only way you're gonna make it in this world. Yeah. All right, let's move on to the next. I appreciate that. Let's move on to the next topic. Take a sip of water. It's hot today in New York, man. It's almost 100 degrees. It's like 90. It's like 90 degrees in New York, man. This next couple of days are going to be hot. How to water the plants thoroughly today. All right, next topic. We're going to be talking about the Asian session utilization. So this topic can be challenging for some traders, depending on your learning curve. Depending if you're a beginning trader, it might not make any sense. But hey, my man's in New York City. Shout out to you. Shout out to NY City. From Brooklyn originally. Shout out to BK. Shout out to Queens, Harlem. Shout out to Manhattan, Hell's Kitchen. Shout out to all the boroughs, man. Shout out to Harlem. Hey, I'll be out there sometimes. This next topic can be challenging, depending on your IQ and depending on how you gauge price action. So to begin with, the main characteristics of the Asian session, like we were just talking about, is consolidation or accumulation. When I first started trading, a lot of traders used to tell me, don't trade Asian session. Don't trade Asian session. It's impossible. It's going to consolidate. It's not worth your time. But we proved that wrong already. We proved that you can trade the Asian session with a certain model. While it does occasionally trend, as you guys just saw, sometimes it does trend in one direction. It trends up or it trends down. However, since its characteristic is a consolidation, that means the session is going to make a session high and a session low, meaning there's an Asian session high and there's an Asian session low. Above that high, there is buy stops. And below that low, there is sell stops. As a trader, our primary objective is to anticipate which direction of the day the market is going to do its range expansion. Is the range expansion going to be up or down? Now, some people may not know if it's going to be up or down, which is why they play the sidelines. They don't trade that day until it becomes a lot clear for them. They're neutral and they're unsure. They opt out. However, those that are committed to the market direction and the range expansion can use the Asian session range, high and low, to facilitate price movement in their favor. And let's take a look at some things here. It's going to be a very interesting topic, right? We're going to be looking at a bullish idea. We're going to be looking at UCAD. And I like simplicity. I don't like complex ideas. I like to use the least amount of brain power when it comes to trading. Now I'm hyped. Man's talking about. I'm just reminiscing about the times I was in Harlem back when I was a younger man. Harlem is still that spot, man. Shout out Harlem, man. All right. So this is the Asian session. You can see there's some type of consolidation here. It's range bounds. I know it does look like it's trending down, but overall, it's still in a range. It hasn't really gone anywhere significantly, especially compared to the last couple of hours before the Asian session. The Asian session low has sell side liquidity below it. The Asian session high, Asia. The Asian session high has buy side liquidity above it. This is going to be your friend. Now, this is why ICT said, as the day progresses, you're going to understand where the market is most likely going to draw to. Sometimes it's too late. By the time you figure out where the market's going, you already missed all the trade opportunities, which sucks. But if you can arrive to it as it starts to progress itself, then you can utilize these highs and lows to help you. And we'll talk about how you can use it as leverage. Now, this is a bullish idea, right? And just clear your mind, clear slate. Let's just take the assumption, all of us here tonight, we're bullish on UCAD going into this Friday. So going from Thursday Asian session going into Friday, we're bullish. I don't know how we arrived to that narrative. Let's just take the assumption we're bullish for the day. We are expecting the range expansion to be up. The first idea in utilizing this, if you're a bullish trader, you want to buy below the Asian session low. That's a no-brainer. That's number one. So write this down, right? If this is the first time you're hearing this, you want to buy below the Asian session low. So as soon as price comes down here, bang, right there. It's been purged. Regardless if it's closing below it or just tapping below it, it's been purged. There's been a tragedy in the market. The market has rated sell stop orders. So anybody that was probably buying short term and was looking for a trending market to keep going, they have a stop loss below here. And we're not saying that that's necessarily true, but that's the methodology and the belief system that we're taking. There's some type of stop loss down here below this swing low or clean lows. That's just how we like to give life to price action. We want to tell a story. I like when I tell a story to it, it makes me feel a lot more comfortable. It makes me gauge it and visualize it a lot easier. And I like teaching it that way, right? There was somebody down here had a stop loss and it was ran out. That's when you want to buy, right? It's the flip side of it. You want to buy when their stop loss is hit. So what could you do here as a trader? You can go long, and there are many ways you can go about it. Here are a few ways you can go long. You can go long on the initial break. You place a a buy stop order here. So you're buying on weakness, meaning market's going down. You buy on that Asian session low, you place the order there, buy stop order, and you look for a long idea. Now, this could be a 1-to-1 scenario. This could be a 2-to-1 scenario, a 3-to-1 scenario. But we know that if it takes out the Asian session low and we're bullish, where should price end up throughout the day? I'm asking the chat, trying to engage with you guys. If it took out the Asian session low and we're bullish, where should price more than likely end up? Exactly. Right? Shout out to Arnold. Shout out to the chat. Thank you for answering. It should end up back to the Asian session high. We can all take that educated guess. Now, it's not guaranteed, but we're traders. We're traders. We're taking speculation. That's the first and foremost thing. We're risking our equity to guess where the market's going to go. Like I said, let's just say we happen to arrive to a bullish narrative because of X, Y, and Z. I don't know what those variables are, but let's just take the idea that we're bullish. So that means we want to buy below the Asian session low and aim for at least back to the Asian session high. We can all say that's a pretty objective stance. It's a pretty measurable thing. It's not a random box or supply and demand zone. We're taking real metrics that we all can find, despite the discrepancies. There's probably little to no discrepancies between the Asian session high amongst brokers, but it's still objective, not subjective. So we can take a long. Now, you can increase the stop loss. Instead of it being 15 pips, it could be 20, it could be 30, it could be 40. I think when utilizing the Asian session this way, I would go with a larger stop loss. I wouldn't go with 15. I would go from anywhere from 20 to 30 pips. 40 is just pushing it. I would go from anywhere from 20 to 30 pips based off of a buy stop order. And I would look for price to go higher. Let's take this off and let's play it out. And you can see it does give us that move. It runs back to the Asian session high, tackles that, knocks it right off. So it runs both sides of that consolidation. Now, let's take another scenario. Let's say you were late to the market for some reason. Yes, you were bullish on the day for Friday. Yes, you didn't get the best buy possible for the day. You didn't get to buy below London kill zone opening price. You didn't get to buy below midnight opening price. You didn't get to buy below Asian session low. You can still take advantage of this because if you still suspect the range expansions that trade higher and there's still some type of draw higher above the Asian session high, because there's still buy side liquidity pools, right? There's clean highs, there's double tops. There's still some idea that price could still run higher. We can buy on strength now instead of buying on weakness. It's ideal to buy on weakness going down. This is the less ideal scenario. If you happen to be late, you can still buy at the Asian session high. You're going to buy with a buy limit order. A buy limit order, not a buy stop order. Going down, buy stop. Buy limit order is going to hit this limit and run higher. You're buying on strength now. Most times than not, you're already going to be buying in a premium at this point. It's not the best case scenario, but it's still something that you can get something out of the market if you are late or you miss the best buy. What I would do here at this point is you can still use a buy stop too, because let's say it gets up here and you miss the buy limit, you can still use a buy stop because price can still come down and take the Asian session high and trigger you in. But either way, you're still trying to buy at the Asian session high. You're going to buy there. Same idea. Let's move this over here so you can see it. So many ways you can trade. So many ways, but you just got to stick to one. Our stop loss is going to go down to the low of the day, the pending low of the day. Because if we're buying here, we're going to take the assumption that this low point here was the best buy or the best turning point that we missed, and it's not going to get back down here. And we'll look for a 1-to-1. So whatever that is, we'll look for a 1-to-1 or then some, 2-to-1, 3-to-1, 4-to-1. But our stop loss must be below the pending low of the day so far. So once it hits that, we're long. Stop loss has to be at the lowest point we have for the day, true day. And so far it was at 2 a.m. And we would hold for higher price action. That's how I would utilize the Asian session high and low. If we're in a bullish condition, if we took the narrative that we're buying today and we'll hold, yes, it's going to be drawdown because you didn't get the best entry. There's going to be some type of drawdown. There might not be any drawdown too. There might be little to no drawdown. Sometimes it might just hit you in and continue running up. But that's the idea. And we hold for higher price action. What are we holding for? I don't know. Whatever you want to gauge on the left side of the chart. Double tops, swing highs, maybe an old kill zone high. Let's just turn on the kill zones here. Look at that. The dead zone, the New York lunch dead zone. Look at that. There's a buy side there. What does price do? Hits it. A lot of ways you can frame your liquidity pools. There's a London high up here. There's a New York high up here from previous kill zones. You can use those. Those are still buy side. Price may still run into that. And we hold. And that's where we are currently in price. So that's how I would utilize the Asian session for a buy scenario. For going into the day, and you're trying to be very simplistic, you're not really trying to look for a lower time frame entries. Maybe you don't have enough time. Maybe you're rushing. Life happens. This is how I would utilize the Asian session. You really want it to be in a consolidation. And like I said before, we answered the young man's question. You even want the New York lunch session to have some type of consolidation too. You can see it trends down, but for the majority of it, it does consolidate and even continues to consolidate into Asian session and then trades up. You can see there's a London model here too. Look how it runs down. It's quick. It's very quick. It runs down, takes out the dead zones low here, right there. Boom. Right at 2 a.m. Takes out the dead zones low, and it runs up. Gives traders probably little to no opportunity to get a cheap buy during London. It happens. It's quick. Those best opportunities don't last long. Most times they're not. They don't give traders that time to sit there like, yo, I'm going to wait for you. You think the market's going to wait to give you the best buy? No, it's out of there. It's out of there. Let's move on to another example. So inverse to that, let's look at Euro USD. I got to get a cup of water. All right. Now I'm telling you, I don't know why, but when you said Harlem, you just got me. I'm still hype about that. I'm still stuck on that. I'm not going to lie. I keep playing through my head. Harlem, man. Yo. Oh, man. All right. Same thing. Bit more trendy here. Bit more trendy. We could say for sure, definitely trendy. But has it really gone anywhere since the New York launch? Not really. Still in a range. It's still in a range here. So we're still going to take the Asian session high and the Asian session low here. Buy side, sell side. Let's say for some reason, whether that's macro, whether that's fundamental, whether that's technicals, whether that is maybe your best pal or one of your trading buddies told you to go short tomorrow. Okay, we're going short tomorrow. How could we utilize the Asian session to help us with that? We're going to look to sell above the Asian session high. We could use a sell stop order. We're going to sell on strength. The market's going to go up, hit our sell stop order, and then we're going to look to see price go down. And that's what we are going to assume. So let's see what happens. Let's play it forward. Midnight, that's true day open. And there goes the purge. Price purge. Asian session high there. If we're expecting the range expansion to continue going down, we can all take the educated guess that the Asian session low sooner or later during this true day, it's going to get wiped out. Whether that's during London or New York or even after New York or London close, that Asian low is probably going to get tagged out if it's going to be a bearish day. The market likes to take both sides of that market. It's a pretty obvious phenomenon and natural phenomenon that we see pretty often, very often. Let's say we're short now. We're short here. We went in with that one-to-one scenario. Like I said, I think for this idea, if you're going to utilize the agent session and trade it this way without trying to look for any lower time frame entries, you got to have a larger stop loss. It's not going to be a 15 pip. I think 15 pips can cut it. It might still cut the deal, but I think you got to go a little heftier. I think anywhere from 20 to 30, because sometimes price just pull up. It pulls up. It gives a real deep retracement or purge above highs and might run above these highs by 15, 30 pips sometimes. So you got to open it up and then look to go short. Man, what am I doing? Get off the chart. I'm going to aim for that low down here to get tagged. Let's see what happens. Play it forward. Price tags it and runs through. You see how just that simple idea can get traders into the market without even having to jump intraday? Like, everybody wants to intraday trade. I get it. Everybody wants to show off to their friends and their chats. Be like, yo, bro, you saw this entry, little to no drawdown. You know, they want to show off to their trading girls and whatever, you know. Yo, shorty, I got this little to no drawdown. I really know how to trade. You want to flex, you know? Cool, right? Do you, right? But I ain't here to do that. I'm here to teach you guys simple ideas. We're trying to pay our bills here. We're trying to teach the community real models. We're trying to utilize things that make sense. We're not a supply and demand channel, bro. We are not an indicator channel at all. Sell there and look to hold for lower price action. You can see it even runs lower than what we expected, right? You could take the TP here. It could be a very short trade for you. It could be a very short trade. But there's obviously other sell-side liquidity pools that we could aim for. Look at this swing low on a 15-minute time frame. Could it run there? Yeah, it could. It could run there too. Let's continue. Let's say we're late to the session again. We missed this. It already started selling. We missed this. We woke up late. We didn't set an alarm. Whatever it is, life happens. And we still are bearish on the day. You can still get in short. It's not the ideal short condition. It's not. But it's better than nothing. You're still trying to squeeze something out of the market. This is how I would do it. I would go short at the Asian session low with a sell limit. Sell limit or sell stop? I think I got them back. I always mix them up. I don't know why I do this. I'm going in with a sell order, whatever that order is. I always do this. I'm going in with a, what is that? Nah, sell stop. It would be a sell stop. I'm going in with a sell stop order. I'm going in on weakness. I could be saying this backwards, honestly. I always do this. Something's up with my brain sometimes. I always say things backwards. I have to post my stop loss at the high because we're going to take that assumption. We're going to take the educated guess that this is the high of the day. So we got to put our stop loss here. We could get stopped out, and this could still be a losing trade. We're going to wait for price to hit that Asian session low, and we're going to go short there. That's where we're going to go short. We're going to aim for sell side. We're going to aim for some type of one-to-one. It has to make sense. The risk-to-reward ratio has to make sense. At least a one-to-one minimum. Minimum effort, one-to-one. Anything more, 2-to-1, 3-to-1, 4-to-1, kudos, right? Pay the trader, though. Pay the trader. And that's what we're going to aim for. We're going to go short there. Let's play it out. Hit. We're going short on weakness, and we're going to hold and look to see if price gives us lower price action there. And this is where we are. This is the end of the week, though. This Friday. We'll see if Monday would have continued this idea. If those that are looking at this and do look to study this, see if this idea continues to trend lower into Monday, into Sunday, Monday, Tuesday next week. We'll see. Who knows? And I think it is going to continue selling because the dollar's bullish. GU, AU, EU, NU are bearish right now. So that's how I would utilize the Asian session range, high and low, if I have a narrative or sentiment on the day. I'm going to check the chat to see if there's any questions, and we're going to move on to a very important topic here. And this one is highly crucial, and I think this is one that holds a lot of traders back. And we're going to get into that. So let me just check the chat, see what's up. All right, cool. Cool. So we're gonna move on to our next session, and we're gonna talk about favoriting pairs, right? The issues with favoriting certain pairs. Now, I know a lot of people in the trading community, right, when they first start trading, first year, 2 years, a month in, whatever, 6 months in, for some reason they gravitate towards a certain pair. Now, for whatever that reason may be, I don't know. Maybe they're very successful with this pair. They happen to just go on a win streak with it. They every time they trade this pair, they happen to win a lot more than often. But sooner or later, they will be humbled. Everybody gets humbled sooner or later in their trading career. They're like, yo, I'm pro with gold. I'm pro with U.S. oil. Man, I'm real pro with ECAD. I'm pro with this. Everybody's pro till it comes down to a certain point of the year where you're not pro anymore, and it's just not aligning. And this is where things get really important. So, what I think is a problem with favoriting pairs is that market dynamics and volatility change month to month. Trends change month to month. Things are not the same. So let's talk about it. Different Forex pairs exhibit varying levels of volatility and liquidity throughout the year. That's a fact. That is a known fact. Different months and different times and different seasons, certain pairs are hot and certain pairs are just not hot. And what makes them not hot is when they start consolidating, because nobody wants to trade in a month that's consolidating. Nobody wants to trade an asset class that's going to consolidate or be range bound for the entire year. It hardly moves. We want to trade markets that move, asset classes that are going to move. A pair does not perform the same during each quarter. Quarter one, Q1, Q2, Q3, Q4 doesn't change. And even the macros in between the quarters as well. And that could be due to what? Economic conditions, geopolitical events, right? War, right? Political tensions, supply and demand, taxes. What else? Interest rates, inflation. This changes how certain currency pairs are valued. So favoring pairs all year long, let's say you just want to trade a certain pair all year long, you're ignoring a lot of fluctuations. And that could potentially lead into missed opportunities and increased risk. You're going to force yourself to trade a pair that you totally are missing the boat on because you're stuck up in your ways and thinking that this is your baby. This is your pair. UCAD's my baby. Oh my gosh, I love it. No. Gold's my baby. No. You got to change it up. You guys know me. I change it up month to month. I ain't with the same pair every month. The only time I would trade the same pair back to back is if the macros and the fundamentals line up and tells me I should be trading it. Even then, so I still switch it up. You guys know this. I still switch it up month to month, and we still execute no matter what. Another thing, you have less diversification. You're so one-dimensional. So when those market conditions are not hitting for you, and you're this gold trader, you're just this gold trader. You're just, like I said, there's a lot of missed opportunities. You're not diverse enough. Your portfolio, your bag, your arsenal is not deep enough. You just know how gold trades? Come on. You think that's what a valued investor does? You think these millionaires are just investing in one thing? They're not diversifying their portfolio? They are. That's the same thing when it comes down to trading. You got to diversify. You gotta be able to trade the majors. You gotta be able to dabble in the exotics. You gotta be able to dabble in the gold or some of the commodities, right? Or the S&P minis. You gotta be able to dabble in those. When you start to be multi-dimensional and you start to place your eggs in multiple pairs or multiple assets too, not just Forex. When you start to put your eggs in other asset classes, let's say it's stocks, let's say it's futures, let's say it's the S&P minis, right? Let's say it's crypto. you have a lot more adaptability than other traders. You have an edge. You have an absolute edge because when the market makers or the commercial speculators or the huge investors start switching to different asset classes, you'll be able to switch into that asset class with them. You'll be able to follow them too. Because when all the major players leave Forex for a certain part of the year and they jump into crypto and crypto's hot again, you'll be able to jump into crypto too. Or when crypto's not hot anymore and they jump into commodities, you can jump into commodities too because you know how to trade it. Or you know how you have a model that can trade any asset class. Right? You know how to swing trade. That swing trading can take you across all asset classes, in my opinion. Intraday trading may not because it's different. It's coded differently. And this is why we have to have these conversations. You can take certain models and apply it to all asset classes, especially swing trading. But intraday trading might be a little different, a little more difficult because the kill zones, like as we know, we're so familiar with Forex, the kill zones start to change, right? The volatility starts to change. When the markets are excited and not excited, it starts to change. So you got to figure that out. Another thing, this is probably like the main basis to it, the biggest problem to it, over trading and being very optimistic because you think this asset class or this pair that you're trading is the end all be all. Oh, it's my baby. Gold would never do me like that. US 100 would never do me like that. Uh, Bitcoin US dollar would never do me like that. So your bias is already like you got this Superman complex. Like nothing will ever hurt you in this asset class. That's not true. And everybody will find out the hard way. I'm just trying to let people know now, especially if you haven't figured it out. Trying to save you from that, right? We're trying to build the bridge better for the following traders or the next generation of traders, right? When I'm 30, 40 years old, those upcoming traders, I hope they look back to all these videos that I post on YouTube and they're like, dang, Deontay was actually talking facts. He wasn't talking nonsense. Now I know to avoid this. He made the path a lot better for me. The over trading and being over optimistic because you think this pair is your pair is foolish. You're not living in reality. I have to be honest with you, my friend. You're not living. I'm not talking to anybody personally, but if the shoes fit, it fits. You know, if the shoes fit, it fits. We're traders. We're men here. Most of us are men. I know there might be a couple gals and ladies here. Shout out to the lady traders too. I recognize y'all too. Most traders are men. We're men here, bro. We gotta keep it up. We gotta keep it a whole 100 with ourselves. Keep it a buck. A lot of people don't like to diversify because they think that this one pair is gonna take them all the way. It's not gonna take you all the way. Because when wars start picking up and the volume starts increasing, you don't know what to do. Or when this pair when the volume starts to decrease and the market makers jump into another pair instead, you're gonna be stuck in consolidation. You're going to be stuck in accumulation, wondering why can't I get a trade on gold? Why does gold keep going sideways? Why is it so range bound for 3-6 months out of the year? Because you're not looking at the macros. You're not looking at the fundamentals. That's where we start. Before we even get on the chart, we need to look at the fundamentals first. Forget about the technical analysis. Forget about the price action. Forget about the algorithmic levels. Forget about all that. What is the macros telling you? What's the weakness and the strength about this pair that you're going to trade? What is it telling you? So in essence, diversifying across multiple Forex pairs or even asset classes, right? Because I know some traders don't just trade Forex, allows traders to mitigate risk, period. Hands down. That is a known fact. If you are a stock trader, are you just going to solely invest in Apple? No, you're going to invest in all the big tech. You're gonna invest in other sectors, right? You're gonna invest in the tech. You're gonna invest in healthcare. You're gonna invest in anything else, any other sectors, or anything. Nothing's coming to mind. You're gonna invest into other sectors. You're not just gonna invest in one sector because when that sector is not performing well, you have other sectors like healthcare per se, right, or the AI sector per se, still tech, to help mitigate some of those gaps or the returns that you may not be able to see in another sector. You'll get it in another one. That's how you got to do this. It's crucial to diversify. Diversity Diversity, diversity. It's always best. Look at nature. Nature is diverse. Diverse. There's symbiotic relationships that are happening everywhere, from the soil, from the fungi, from the mycelium, from the insects, from the mammals, from everything. There is a symbiotic relationship. There is a pyramid going on. You take one of them out, things fall down. You gotta diversify. Diversity promotes the greatest chance of survival. It may not apply to everything, but most things. Diversity, diversity, diversity. You gotta have flexibility amongst the pairs. You gotta be able to switch it up. And let's take a look at the chart. I know the chart's just sitting here. Let's take a look at the chart and what I mean by that. I'm not sure if I talked about this last time on Forex Fridays. Right now, the fundamentals for the majors are tough. Are tough for EU, for AU, for GU, for NU. It's very tough right now. I'm not saying that there's no trade ideas there, but it's tough. When we go from the larger time frame, let's get this off the chart. We're gonna go let's go in the monthly chart. It's easier to see it. So in the monthly chart, just go to the beginning year of 2024. Where in the world has EU gone? It's been 6 months, bro. EU has gone nowhere for nobody. It's been 6 months, and EU has not gone nowhere. We're about to go into July, bro. We're going into the summer, and EU is still range bound. It's below the yearly open. Yes, I know. It's in a discount. But for the last couple of months, it's gone nowhere. Why? Because of the fundamentals. But here we go. People saying, no, I'm going to trade it anyways because I like the Euro pairs. I like EU. No, it doesn't make sense. Get out of it. Let's take a look at something that's more dynamic in nature, right? Just a small switch. All you got to do is change over the yen. EJ, look at the beginning of the year. Different. This is ranging. This is environments that we want to be in. But how did we know that EJ was most likely going to perform like this even before coming to the charts? The fundamentals. The interest rate differential. Ooh, the laptop's going to die in 4 minutes. Ooh. Plug this in. You don't need that dying on us. All right, cool. The interest rate differentials. That's the first macro that I would look at. Besides the seasonal, before the COT data, I don't even use COT data. That might be a question some people ask. Deontay, do you look at the COT data? No, I don't use the COT data. It's delayed. It's still delayed. You get it a whole week late. The data is coming out a week late. It's talking about last week's data. I know there might be some dudes out there in the community that know how to interpret it really well outside of ICT. I still haven't really dibbled and dabbled in it, but I think it's delayed. I need something that's present time. I like that present time indication, right? I want to live in the now, not the past. I want to watch the price action now. The COT data is lagging, and the commercial speculators, we know they control price action. They have a hedge program too. So even when they say that they're increasing their longs, the price action can still drop. So it's like it's a tough thing to use. I don't like that. Besides that though, EJ is dynamic. Let's take a look at another major. Let's look at GU 2024. Where has GU gone? Absolutely nowhere. But people will swear by GU. GU's my baby. It would never do that to me. I make my most money off of GU. But what if the time period and the environment, the scope or the playing field of the macros are just not there to support you trading GU? Why would you put yourself through that problem? It's a weakness. It's a flaw. It's a fallacy. Leave it alone. All you got to do is trade something else that has more structure behind it and has much more fundamentals behind it. Look at GJ. This thing is trending. It's been ranging. Sorry, it's been moving, not ranging. It's been picking up speed. Look at the last month. Look at the last month we had down too. Right? And I don't mean to jump into other topics, but all this stuff blends together. It's a big picture. Look at the last down month we had, December. If you were a buyer after December, man, all you had to do was wait for one down month. Wait for one down month and buy the next month and hold. But everybody wants to talk about intraday. People still think intraday is where you make your money. I think New Zealand dollar versus US dollar was the only one that was really moving the most, I think. Still range bound. Yeah, still came back. So personally, I traded NU for wait, that's December. For January, I caught a nice short for NU, and it continued to sell off. I could have honestly held, but I didn't. I got out the next month and didn't touch NU for the rest of the year so far. But look how it's coming right back up. It's still ranging. It's below the yearly opening price. It still hasn't really gone anywhere. We'll see if it does as the year continues to progress. As we go into the summer, we go into the fall, we'll see what happens. Until the rates start to change between all the central banks around the world, between the Feds, between everybody else, until the rates start changing, then I would start to say, okay, now I want to dabble back into the majors again. I had issues trading GU this year. Wasn't like we failed to find any setups, but it was difficult because it was a lot of back and forth, back and forth, back and forth. I don't like that. The fundamentals are telling me it's going to be difficult. It's two strong currencies. Rates are too high for both banks, Bank of England and the Feds. The rates are too similar. But as soon as we go over, even NU, the rates are literally the same. It's the Reserve Bank of New Zealand has a interest rate of 5.5. And just to prove that I'm not just talking crap, let's look at it. 5.5 New Zealand dollar, or Reserve Bank of New Zealand, 5.5, literally equally match with the Feds. So why would I trade? Why would I trade that from a fundamental perspective? I wouldn't. I'm gonna keep going to the strong versus weak currencies. Japanese yen. Oh yeah, we're gonna expose you. We're gonna expose you until you guys fix that current situation. Until you guys get out of that hellhole, we ain't gonna leave y'all alone. We're gonna keep utilizing you. Now I know there's other central banks, so there's more to it that I may not know. So I can't speak on things I don't know. I just know that the major players in the world, right, the reserve currencies in the world, it's definitely not coming from Chile. Right? It's not coming from China. It's not coming from Denmark. It's not coming from India, really. It ain't coming from Norway, Poland, or Russia. Even Russia. Look at the interest rate. Oh my God. Yo, people are getting killed out here on debt. Imagine owning a credit card in Russia. Oh my God. You're paying so much interest. If you have any late fees, man, oh, you're paying. You're paying. So right now it's tough. So make sure you pay those debts off, man. Pay it off. Or hey, do what you want to do. I am not a teller or a bank teller to tell you any professional advice or financial advisor. So do your due diligence. But night and day, why you should be trading and switching up certain pairs. NJ, look at that. It's gone. It's gone. Look at the last down month we had. It's almost bulletproof. Almost bulletproof. It's almost like you're a fortune teller. Buy after a down month and you'll be fine in a bullish trend. Sell after an up month in a bearish trend and you'll be fine. But you got to start on a higher time frame and break it down to the daily, break it down to the weekly. And then you start going intraday. It always starts here first. Don't go down 15-minute first to start finding your speculation on daily bias. You're not going to find daily bias via 15-minute time frame. Impossible. You could potentially find it via 4-hour, but it's easier just to see it daily, weekly, monthly. You'll see it right away. It's a night and day difference. Now that we finished all the topics, I'm open to any questions, anything. I'll try to answer any prop firms, any live brokers. I know some people don't live in the United States, so I might not be able to answer those questions. But for those that live in the United States, some brokers that I truly believe in, anything that's regulated. So Forex.com, good broker, just high spreads. It's regulated. What do you expect? They're here to protect themselves and here to protect you. And Oanda, high spreads too, but they're here to protect you and themselves. Don't be out here going with unregulated brokers. I don't care what anybody tells you. If it's unregulated, don't touch it, bro. don't touch it. Because if anything were to happen and they either go under or they don't want to pay you out, you can't sue them and you can't do that. No, go with those regulated brokers. Same thing with the prop firms. Look into those prop firms. Look at that history and what they've been doing in the last 3 years, the last 6 years. Have they gone under? Have they reopened? Whatever, have they changed their pricing in the last couple of months? Look into those little details. What is their liquidity provider? Who is their liquidity? Is it an in-house liquidity provider? Is it an external liquidity provider? Those things you got to look into. All right. Can't see your screen. Screen you're looking at. Are you just looking at the interest rates? Unless that was an old thing you're talking about. Yeah. You gotta pay attention to a lot of things. It's easy. It's easy, but it's not easy. Like, I like to say it's easy, but it's not, man. It's truly not. It could be simple, but it's not easy because there's a lot you got to take into. But once you get the backbone and the foundation of what really drives these markets, the sky is not the limit anymore. Right? There's infinite amounts of opportunity. You could plug and play, get in this asset, jump into another asset, jump into this currency pair, jump into another currency pair. You can start switching it up. You can start diversifying who you are as a trader on your trading journey. You can start doing that. Once in a while, back then I used to show a couple crypto trades, swing trades. They play off. You don't gotta stay in Forex. You can switch it up. You can switch it up. Now, if you do want to learn how to swing trade, right, we do have that available to you. Paid mentorship. Shout out to everybody that's in the paid mentorship. Yes, we do have a free channel, a free discussion channel. You can join that. Telegram will be ending. I know Telegram was a very quick and easy way for us to communicate, but it's not concise in the data and the examples that I'm putting in. So, for example, just to show you what it looks like, share this tab instead. All right. Oh, here, server settings, rows. We got a couple rows, got a couple bots and stuff in here. If you're just a member, view the server as a row. This is all you see. Everybody keeps asking me, where's the link to the paid Discord? It's under important information. Click it, come down. There it is. Tells you everything that will be available in the paid chat. Now, when you switch over and you get in there as a member, all right, let's take it off. If you become a member, FF member, Forensic Forex member, this is what you have access to, right? You got our private chat. You see that there? We'll be talking about it here. We'll be talking setups, personal one-on-ones. We're talking about Asian session. We do live setups and everything. We have a trading forum, right? We talk about ideas. Anything that somebody has a question about, we post it in the forum, right? We're trying to create a real community, right? Just like Reddit. It's the same thing. You post a forum, ask a question, traders give their opinion on it. And that's it. We have an open discussion, right? Voice chat. We have the models. Step 1, step 2. We show all the setups. London, New York. Not saying you can't do this on your own, but this is why we moved over to Discord, because it's a lot more organized. In the Telegram channel, you'd have to scroll through pinned messages and stuff. Now you just come straight to a folder. Now you know what you're looking for. Smash candle ideas. I'm giving a free BOA. There you go. There's a sell opportunity on gold. Smash candle. There was an order block. We talked about it in the paid chat. That price is going to pull up into this bullish, bearish order block. For those that are in the chat, you see that? I told you guys, be careful of that daily order block. Price is going to trade up. Smash candle theory. Go short on that candle's low. Close above 3 or more highs. Sell side liquidity below these swing lows. Projections. There we go. So if dollar is going to continue going higher, we should see this setup play out. So not saying it's going to be successful, but just an idea how we frame the ideas. And we show we show the steps. We got office hours. When I talk about office hours, this is what I'm talking about. I have a one-on-one session. The max people that can be in here is 2 at a time. So it's me and that other student. And we could go over whatever question you want to talk about. Talk about how to pay taxes. Talk about what prop firms I would probably recommend. What live brokers I would recommend. Trade subs I would recommend. Something we could come up with a trading model for you. Trading psychology. What are your problems? We talk about anything. Then we got certain things that are outside of charts, to ease our mind. Garden, post pictures about anything. plants, trees, etc. Right? Fitness, right? Because you gotta stay fit. Ain't no point in making all this money trading and you die at a young age. You know what I mean? Like we want to have longevity, so fitness is important. Keep the body right, keep the mind right. And then we got memes, of course. You post memes in the chat here and here. See if they're long. See, this is hilarious. Who said trading was stressful? I'm 25 and I feel great. You're looking old as hell. Grayed out. You got gray hair. You balding already. It's funny, man. So that's what the paid chat will get you. It's $20 a month. You don't have to commit every single month, right? You don't have to pay every single month. You could end your subscription. Maybe 1 month you want to pay, get the knowledge, and move on. But this is for those that just want more one-on-one and more access to me. That's it. The regular chat is there, though, for everybody else. So we still are a community. Just because Telegram is ending does not mean you still don't have access to me. Doesn't mean I won't answer your questions. Don't mean I won't ignore you or anything like that. Just know that I am more focused on the people that have put their dollars towards me, because time is money. And if they're going to throw money, I got to be there for them. It is what it is. And that's it. That's it. Yeah. Hopefully you guys found this informative tonight. Forex Fridays. We do this every Friday night. And if I don't do it Friday night, that means I'm either doing something, but we try to be here every Friday night just to keep the community informed. Yes, I know we do weekly range review all the time. I know I sound like a broken record, but it's for your benefit. And it's for those new traders mainly coming in or that are new subscribers to the channel. It's for them too. And I appreciate those that already show up every night. I appreciate those that probably heard me talk about these things 100 times and still come here every night. I appreciate you guys. I appreciate the support. I appreciate you guys sharing the page or telling people about it. I appreciate you guys. I really do. I want you guys to be successful. I don't want to see any of you guys fail. I don't want you guys to get hurt. I don't want you guys to get scammed. I don't want any of that because I've been through it. And that's not going to happen under my watch in my community. Yeah, man. It's Forex Fridays. Let's get it. Did you see my question? Oh, somebody asked a question. Can you share how to use the DXY when we are diversified? Absolutely. Good question. Great question. All right, let's jump back to the chart. Let's get this off. DXY. Let's talk about correlations real quick because we got to get that before we start talking about DXY. We got to talk about correlation. So the DXY, whenever that goes up, all our majors go down. EU, AU, NU, GU, and a few other asset classes go down as well, right? Dollar up means stocks should go down, typically, right? Typically, in normal market conditions. Right now, it's not normal in what's going on in the world. So dollar up, yields up, interest rate up. So right now, currently, the Feds have a high interest rate, so that's why we've been seeing the yields go up. Now there's a divergence going on between the bond yields, the 5-year, 2-year, 10-year, even the 30-year, 20-year. There's a divergence going on. If you check on the daily, dollars going up, but the yields are going down. So there could be signs that something might be up here, but it could be a fake out. I do think everybody's still going to retreat and return back to the dollar. So let's say we wanted to start trading futures and we're trading euro futures and dollars going up. We want to see if dollars making higher swing highs and higher swing lows. Very fundamental thing. And is EU doing the same thing? Are we getting those fake outs when price breaks a high and it drops lower? So for example, let's just open the chart, put it side by side. What did I say? EU? I did say EU. Okay. Let's go daily chart. Go here. DXY. It's monthly, it's daily. We can clearly see bullish trend. We've been talking about it in the daily updates. Higher swing high, higher swing low. Higher swing high, higher swing low. Down days, buying after it. Cool. Look at what it's been doing for the Euro futures. Inverse, completely inverse. You can see one is going down and one is going up. So we're looking at correlation here. So if we keep an eye out on the DXY. I know there's some people that do trade the DXY, their brokers allow it or their prop firms allow it. Kudos to them. But if you can't trade the DXY, you need to use it as an instrument or an asset class to help you understand what currency pairs you should be trading. So if you're trading Euro futures, look at the dollar. Look at the dollar. It's going to help you out. It's going to help you understand whether or not these short-term rallies are just fake outs, whether or not these short-term swing highs are going to either be rated or respected. You see all these lower swing highs. Doesn't rate that here. Take a look at this. There's a swing low here. It happened one time today. You disconnected. I knew it. I told y'all guys. I said it might happen one time today. Sometimes it happens twice. I thought I was gonna get away tonight without it. But it happens. But we can see on the left side, it's inverse. Right, this is exactly why I said your intermarket analysis needs to be on point. You can't just stare at one asset all day long. You gotta diversify. There's gotta be inclusion, right? You can't exclude other asset markets. Take a look at the bond yields. Hopefully, I'm answering your question because I possibly could not be answering your question. Hopefully, this answers your question. Take a look at the bond yields. Oops. Here, come down to the bond yields here. Generally speaking, when dollar goes up, bond yields go up. When yields go up, dollar goes up. If you take a look since the beginning of the year, look at 2024, the start of 2024, it's going up. The start of 2024 is going up. But right now, there seems to be a small divergence going on here. It's dropping lower. Now, there could be something going on that the feds are not telling us about that might happen. They might be cutting rates next month. Who knows? I don't know. They said that they're going to promise at least cut rates. Well, they said at first they said it was 4 times. Then they said it was 3 times. Then they said it's at least 2 times. Now they're saying they're going to at least cut it 1 time. They're promising to cut it 1 time. But I don't believe them. Until they do it, then I believe them. The same thing with the Bank of Japan. When the Bank of Japan kept saying, oh, we're going to raise rates, but they never did. Oh, we're going to raise rates, but they never did. But then they finally did. Then I believe them. Until they do it, then I believe them. I'm not trying to guess, play no guessing games. It's Russian roulette with these central banks. It's not like I'm sitting there next to Fed Chairman Powell and his pals, and I know if he's going to cut rates or not. Until the day comes and they do it. Then we readjust and reanalyze what the market should be doing. Bond yields should be going up, and I think this is just a fake out on the bond yields. They're dumping U.S. Treasuries overseas, especially the Bank of Japan, because they're trying to support their yen. But I do think everybody's going to pour right back into the dollar, and the stock market's going to crash, and dollar's going to fly up, gold's going to drop, but we'll see. That's just my speculation. I don't know if I'm answering your question, my man. Hopefully I am. Guys can't hear me. You guys can hear me. Okay. Yeah. You gotta be multi-dimensional, man. You can't be one-dimensional. You can't just sit here and just say, yo, I'm sitting here looking at gold all day. And it makes sense. It makes sense that this sell might play out. This sell signal that we're getting, right? Give y'all the freebie. That sell signal that we got off the smash candle might be playing out right here. And there was even one here too. This was a smash candle idea. This close was above three or more previous daily highs. And as soon as price, and you can see it's truly a smash candle too, because that candle did not wait. That candle opened, it ran up, and it shot right down. Anybody that was like, yo, I'm going long on gold, they got their heart broken, man. Oh my God. And it might be happening again here. Same idea is happening right here. It's happening again. But you can see how there's a stacked idea too. Bullish shorter block, bear shorter block idea. Price trade it down, trade up, and then we might run back down there. Higher time frame ideas, it's easier. That's what ICT said. If you're a new trader and you're somebody that's getting in and you're trying to look to compound at least 3% per month, stick to your higher time frame PD arrays and trade around those. You're going to be a lot more in the trend than other retail traders that are just frantically looking at the 5 minute and trading 50 trades a day. That's beyond me. Like if you're taking more than 3 trades a day, oh man, bro, you're really exposing yourself to a lot of risk, especially if you're not getting it in the right direction. You know, sometimes, and this was a habit I had back in the day too, and I'm glad I don't do it anymore. I used to just spam entries, right? Thinking I'm a high frequency trader, I'm an algorithmic trader. I would spam like 50 entries, right? Trying to maximize my leverage to a margin call basically, and hope that the market just flies in that direction. And if it didn't fly in that direction, I was down bad. So it's better to take less trades per day. I like to trade if I'm intraday trading, I'm taking 1 trade per day. And that 1 trade is going to be 0.5%, 1%, 2%, or even 3% if I'm really feeling froggy. I'm going to take 3%. And that's it. That is it, my friends. Like I said, do the right thing for you and your future family. Invest in yourself. Even if you don't stick to trading Forex, if there's anything that you take away from me, anything, invest, 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 invest. Real estate, stocks, a new trade. Maybe you learn how to fix cars, you learn how to fix bikes, you learn how to build houses, whatever it is, invest in your future. Things are not going to get easier in the next decade. I promise you that. This is coming from a 25-year-old young man. I already understand how this world works, and I know a lot of you guys do too. I'm just trying to reinforce it. It's bigger than trading. It's bigger than you. You matter, but the bloodline matters even more. The next generation matters. I love you guys. I'll see you guys next week. Enjoy your weekend. Be safe. Do the right thing when nobody's looking. Be a man. Peace.